Now, traders at Axis Bank expect the bearish buyers in the market to linger as investors cherry-pick high-yielding instruments. Meanwhile, liquidity in the money market remains in the negative territory. Ladi Belo, head of fixed income at Axis Bank, joins me now for more market movements. Ladi, thanks a lot for joining us on the show today. We are seeing depressed liquidity levels and then the bearish buyers remain dominant in the market. But walk us through some of the subscription and then allotment rates we saw pan out from the midweek T-bills auction, 166 billion naira on offer as at Wednesday.
Right, so what we saw on Wednesday was the NTB auction floated by the DMO, where we saw very weak interest stemming from some of the subscriptions that we've seen very close to the 1 trillion mark a couple of weeks ago. But at the auction, we saw an increment in rates. So rates cleared about 21.24%, coming from 20.68% at the preceding auction. This represents about 56 basis points increments in rates. The subscription we saw on this front was about 269 billion, especially skewed towards the long end. This is where we've seen most of the interest throughout the first couple of months of the year and towards the latter parts of the end of the H1 rather. So we've seen healthy subscriptions going into some of the previous auctions, but what we've seen of recent times is weak subscription stemming from the weak appetite across the fixed income curve.
Interesting.
So in the secondary market, we're seeing a bit of cherry picking on these instruments, especially on the belly of the curve, where we've seen the March and the February papers trading as high as 23% discount rates on those fronts.
Yes, and so far we've also seen improved offers skewed towards the underrun bond, but especially the 2033. But let's talk about how investors also positioning for Monday's bond auction, the size of the expected bond auction, and what are some of the forecasts the team at Axis Bank are looking towards.
Okay, so it's around about 100 billion across the three maturities, the 2029, 2031 and 2033 bonds, where the auctions close at the June's bond auction on the shorter end of the curve was 19.64%. On the 2031, it closed at 20.19%. And on the longer end of the curve, that's the on-the-run 2033s, the 9-year reopening, we closed at 21.5%. And this is an all-time high in the bond space. This is the highest level we've seen historically within the space. So going into the auction on Monday, we actually expect a further increase in rates, as this would be in continuation or in line with the body language of the DMO to tighten the policy stance, to keep interest rates fairly high, to combat the levels of inflation that we're seeing in the market currently. We have the inflation reports ready to print at some point early next week. We currently stand around 33.95%. And we do believe that we might hit the 34% mark before the base effect kicks in a couple of weeks, stemming from the removal of the subsidy as well as the unification of our markets within the FX space.
And in terms of your projection as well with liquidity levels, how do you see things going? Will it further worsen?
Please repeat that.
In terms of liquidity levels as well now, market liquidity, that has remained depressed for quite a while now. Your forecast here too?
Right, so as you rightfully mentioned, we're in the red territory. We're currently about 1.2 trillion in the red, so we do expect to see another weak bond auction on Monday. And for that reason, we're expecting a slight increase in rates across the curve.
And Ladi, now, just like you highlighted, everyone is also fixated on the next inflation report and how this would also likely inform the next monetary policy committee decision we'll have later this month. But for you now, if we were to look into the crystal ball, how much of a rate cut do you think might pan out? The CBN governor still insists on the stance that the worst of the naira volatility is over, and we still see the naira trading well over 1,500 naira against the greenback at this point in time. Do you think we would have the naira appreciate further as the optimism been shared?
Well, I guess the FX side of the market is the elephant in the room. Currently, we're around 1,600% levels, which represents somewhat a 50 naira depreciation from what we've seen earlier in the week. But with regard to the MPC auction, we we expect to see a slight increment in the monetary policy rate between 25 and 50 basis points to stay in line with the stance of CBN's body language, which is to keep up the hawkish stance, although at a less aggressive pace.
Ladi would have
while other policy levers remain fairly stable.
Yes, we'll have to leave the conversation here for now. Thank you so much for your time on the show today. That was Ladi Belo, Head of Fixed Income at Access Bank.